Hi, I'm Karen Edwards for the Interest Saver Home Mortgage Program. I have some very important news regarding your home mortgage. Whether it's for the refinance of your present home or the purchase of a new home, we can save you over $100,000 in interest costs, guarantee you a low fixed interest rate, and provide security and protection for your family. There's a revolution going on today in home finance, and the Interest Saver Home Mortgage is right at the center of it. The largest investment decision most Americans will ever make is their home mortgage. Today, with thousands of lenders to choose from, the process can be confusing, complicated, and intimidating. The wrong decision could cost you and your family tens of thousands of dollars. Over the next few minutes, I would like to share with you 3 simple steps to the best home mortgage available today. A home mortgage that will save you over $100,000 in interest costs, guarantee you a low fixed rate, and provide safety and security for you and your family in the years ahead. The first step to building the perfect home mortgage is to decide which type of loan best fits your budget and goals. Today, the one-size-fits-all mortgage philosophy simply does not work. Each borrower's individual situation is unique and should be matched up with the right loan program, right loan amount, and of course, the lowest rate possible. In every major housing market in the United States, consumers are faced with over 1,000 different choices of where to get their new home mortgage, including banks and savings banks, mortgage brokers, and the internet, just to name a few. What all of these institutions have in common is that the mortgage rates they quote on any given day are all tied to the Treasury bond market. So, if yields on Treasury bonds are moving up or down, mortgage rates will do the same. Many consumers become frustrated because the rates they see advertised in the local newspaper or on the internet simply are not available. With interest rates changing so frequently, how can you be sure the mortgage and rate you receive has your best interests in mind and not the bank's? The Interest Saver program solves this dilemma. We will search our national database of the nation's top mortgage investors to find a low competitive rate for your type of mortgage. It's fast, convenient, and simple. One call shops the entire market, and the rate we quote you is locked in and guaranteed, so there's no surprises at closing. But finding a great rate is only part of the equation. After a careful analysis, the Interest Saver program provides you with 3 different side-by-side loan comparisons, so you can see in black and white which loan is truly best for you. Today, millions of homeowners carry balances on high-interest credit cards, which are not tax-deductible. Worse, most people don't realize that a $5,000 credit card balance at the recommended monthly payments will take over 25 years to pay off. In your side-by-side loan comparison, one strategy shows you the benefits of paying off your high-interest credit cards with home equity, which is of course at a much lower interest rate and 100% tax deductible. Now that you've found a low rate and the right type of mortgage, step 2 will reduce and minimize your total interest costs. By far, the most popular mortgage today is the 30-year fixed-rate mortgage. Let's take a closer look. Its long-term interest rate guarantee and affordable monthly payments make it the mortgage of choice for the vast majority of homeowners. However, this type of loan also has one huge drawback which most people are unaware of. The interest that you pay on this type of loan is referred to as front-loaded, which means the majority of each monthly payment you make in the early years of the loan is applied to interest costs, and very little is applied to reduce your principal balance. Have you ever looked at your year-end mortgage statement in shock, amazed that even after making $15,000 to $20,000 in mortgage payments, you only reduced your mortgage balance by a few $1,000s? Just look at how slowly your balance declines. And even after making 10 to 12 years of payments on your 30-year mortgage, you will still owe the bank a staggering 76% of what you originally borrowed, and still have another 18 to 20 years of payments to make. Where would you rather be in 12 and a half years? Still owe the bank over $151,000, or own your own home free and clear? There has to be a better way. How about a fixed-rate mortgage from one of the nation's largest lenders with guaranteed affordable monthly payments that will save you over $100,000 in interest costs and have your mortgage completely paid off in only 12 and a half years? No, that wasn't a mistake. I did say your mortgage would be completely paid off in only 12 and a half years. That's exactly what the Interest Saver program will do. Just imagine the interest savings is enough to pay for 3 cars or a college education. It's the best of both worlds. You can get a low 30-year fixed-rate mortgage, reduce your interest costs by over $100,000, and have your home completely paid off in only 12 and a half years. Here's how it works. By taking advantage of the prepayment feature every mortgage contains, the Interest Saver program adds small additional prepayments to the mortgage principal earlier than originally scheduled. These prepayments are very low in relation to your monthly mortgage payment and gradually increase in succeeding years. And with your annual growth in income, your monthly payments stay affordable while you pay off your mortgage in less than half the time. And don't worry if your circumstances change and you want to skip a prepayment or stop prepaying altogether. You can do so at any time. The choice is always up to you. The Interest Saver program is the affordable way to cut your interest costs and have your home completely paid for in less than half the time. That's truly revolutionary. Step 3, protecting your family. So, now that you've learned how to find a low rate and reduce your interest costs by over $100,000, there's still one more major issue, perhaps the most important issue of all. Just for a minute, think the unthinkable. What if you or your spouse suffered a premature death? Think about what would happen if suddenly you're not there. Where's the money going to come from when your income goes away? Will your spouse be able to pay the mortgage? How about the rest of the bills? Over 75% of homeowners with mortgages are severely underinsured, not because coverage is unavailable or unaffordable, but because no one ever bothered to show them a better way. How about a mortgage that's covered by a life insurance policy from one of the nation's largest life insurance companies that will pay off your mortgage if you die and refund you every penny of premium you paid for the coverage if you live? The Interest Saver program has an optional life insurance feature with refundable premiums that does just that. You get complete insurance coverage for as long as you have your mortgage and a full refund of every penny you paid in premiums. What could be more fair than that? Life insurance isn't for people who die, it's for people who live. Life insurance is there to keep the family living in the same house, put the kids through college, and help your spouse retire comfortably if you are not there. As you can see, the decisions you make today can have huge implications for you and your family down the road. So whether you're refinancing your existing home, consolidating high-interest debt, or purchasing a new home, don't settle for just any mortgage, because as you can see, there are major differences. Just give us a call and we'll build you a better home mortgage. And remember, 12 and a half years from now, which isn't as long as you think, your house will be paid for free and clear. How many of your friends and neighbors will be able to say that? Well, that's all for now. Thanks for watching, and we hope to hear from you soon.